Thanks for tuning into Countdown. My name is Neeraj Shah. With me are Devina and Navneet, and the market's looking okay for themselves. In fact, we're doing better than what we were doing for a better part of the trading day today. Up about 1.5% for the Nifty Bank. Quickly cut to the chase. It's a packed show, but let's quickly tell you what's happening in the markets first. So, as I said, about 1% higher for the Sensex. What's leading the index higher? You have to say Hdfc Bank, and then giving it companies Infosys from amongst the heavyweights. So both of these stocks are up over 4% and trading reasonably okay. Tata Motors, not quite the heavyweight, but is the top gainer on the index, up about 6.5 to 7%. There's some strength in BPCL and IOC today. And Reliance Industries is up 2.5%, 31 rupees in the green. So that is the other one which is giving both of these a good company. What is not done well? The likes of Infratel, ITC, and to an extent HUL has corrected another 2.5% in trade today. So good start. Banks like HDFC doing the trick, at least in a large cap space. Devina, what about the broader end of the spectrum? Good afternoon.
Good afternoon, Neeraj. So the broader end of the spectrum is doing slightly better. There's an outperformance compared to the benchmark index in the Nifty mid-cap 100 index, which is higher by, I think, closer to 1% plus. Aside from that, you've got a few stocks that are in focus. Now, remember on Friday's session, we got to know that S&P Global ratings had downgraded its outlook for certain NBFCs and had downgraded the rating of Shriram Transport Finance. We also spoke to the management of Shriram Transport Finance. That is the one that's down 13% in today's session. Aside from that, SolarFin on the update that they gave, which was a little bleak, was down 7%. PVR is down 7%. And then the fact that the aviation companies cannot start booking tickets is another another blow to them. And therefore, the Interglobe is down about 5.5%. I believe Spice is also down in the session. Metal stocks is the worst performing index in today's session. So all of those metal names are down and out in the trade today. Some fertilizer names too are looking weak, the likes of the Deepak Fertilizer. What's doing well is the smaller banks. Central Bank of India is up 20%, UCO Bank is up 20%, J&K Bank is up 20%, Yes Bank is up 20%, and Indian Bank. So the first six names on the Nifty 500 are all banks. Smaller banks. Adani Power 13% higher. Kochi Patil had a swell run on Friday, and today too is up about 12%. A few names. I think IT is doing really well today. Sonata Software is up 10% in this session. Amongst the larger names, Infosys is supporting the IT index. Varun Beverages makes a comeback, 7.5% higher on this one. Nalco, Utkal Block given the go-ahead, and the stock's up 7%. You've got Canara Bank, then you've got a few names in the sugar space that are doing okay. So all in all, it seems like a fair deal today. The pickup has been good in the index so far, but also watching out from the futures and options space.
Good afternoon, Devina. Well, nothing to complain actually, because in the last 15-20 minutes we have seen a good recovery, and once again 9,300 is the mark. I think on closing basis we should closely monitor today. On Nifty futures, just that we closed at a premium of almost 44 points on Friday, and the futures have slipped to a discount. That's giving you an indication maybe there is profit booking, or there could be traders who are creating short positions at these higher levels. Nifty Bank is the other one which went up on Friday on account of short covering, but today we are seeing build up on Nifty Bank futures. At least the open interest has gone up by between 18 to 20%. Remember, we've been highlighting India Volatility Index, and in the last few days it's cooled off. Last week it cooled off 10%. It's cooled off nearly 50% from the peak that we've seen in the recent past of 86.6. But in today's session, I think VIX is on the higher side, though not too much, but still it's up about 1 to 1.5%. Important to see then what levels to watch out, since it's just 2 weeks to go for the monthly expiry as well. 9,200 put and 9,300 put strike. Actually, both of them have become active, especially after the recovery in the last 20 minutes. 9,300 put has also seen OI addition of about 5 lakh shares. 9,200 put also witnessing OI addition of about 5 lakh shares. So I think the fight will be between the bulls and the bears today on closing basis on 9,300 mark, because the call side too has added nearly 6.5 to 7 lakh shares. But if you are looking for a range till the expiry, I think maximum open interest on the puts on the call side is now at 9,500, and on the put side it is somewhere about 8,500. So watch out for these levels. Individual stock futures, of course, NP will be coming out with its numbers post market hours. We'll also be getting you the preview in a while. Open interest has gone up. Options data is suggesting a range of about 600 to 700. Keep an eye on this one. BEL, Bharat Electronics, after a while there is a significant OI buildup that has been seen here. So 45% higher in terms of open interest buildup. Of course, the stock stocks also gone up. So we are seeing fresh long positions for something like Bharat Electronics. And then you've got from the NBFC space, we have seen good recovery in the past few sessions. So Equitas being one of them. The stock's up for the third straight session today. It has gained about nearly 5 to 6%. Futures indicating with the action that you're seeing today that the traders are still betting on the long side for this one. So net, things are looking good. I think it remains to be seen if 9,300 gets conquered on closing basis, and then it's the 9,500 mark which will act as a big resistance. And then, of course, it's the 10,000 mark. But let's see. So far, the recoveries that we've seen in the recent past, they have been gotten sold into. So that's about the futures and options picture. I think the maximum contribution today is coming in from Hdfc Bank, which came out with its numbers on Saturday. Numbers looked pretty good, and the stock's also given a thumbs up. But the other one, the big one today, the heavyweight on the index, which is contributing nearly 20 to 23 points for Nifty's gain, is Infosys. That one comes out with the numbers. Let's go across to Agam Vakil to find out what the street is expecting this time around. Agam, we've seen numbers coming in from TCS. Wipro refrained from giving guidance, and this time around, I believe once again the street will be watching out whether Infi gives that revenue guidance or not.
Yes, absolutely. Well, in terms of the earnings, we are keeping an eye on revenues, which is likely to gain around 1.6% in terms of rupees. Dollar revenues are expected to decline by around 0.3% sequentially. We're also expecting margins to remain largely flattish around 22%, and we're also expecting profits to decline around 4.5% quarter on quarter. As you mentioned, it is going to be about the quarter and how March has panned out considering the lockdown. We'll be watching out for that and the impact on the earnings overall. But I reckon a lot of focus will also be on the outlook of the company. Now, while a lot of these companies have refrained from giving a guidance, a lot of analysts believe that Infosys will give guidance for the whole financial year, except that it will be significantly weak, as well as the range will be a lot broader than your usual 2% as far as the outlook is concerned. But on the whole, we are watching out for that, and we are also watching out for the banking and financial services as well as other verticals, how things are panning out at this point in time, considering we are already looking at a lot of weakness across the sector.
Well, let's wait and watch how Infosys shapes up. For now, it's doing okay, 4% higher in trade. Ajit Mishra is with us. Agam, thanks so much, of course, for putting that into perspective. Ajit Mishra is with us. So let's first talk about a quick thought on Infosys, and then we'll get to the markets as well. Ajit, ahead of the results, up about 4%. I wonder if you see anything special on the charts here for Infosys.
Yeah, good afternoon, Neeraj. So, Neeraj, yes, it's up today, but broadly, if you see that the stock has been hovering in this range of close to around 600 to 660 from almost 2 weeks now. And if you see that the other IT majors post results, Wipro, TCS, they're also trading sideways. So I believe that this sideways bias may continue in Infosys also. And either side decisive break above 680 or 620 would going to trigger the next directional move. So as of now, it's something that one should wait wait for any decisive break before taking any fresh position.
Okay. What about the markets, Ajit? We've recovered some bit of the lull of the morning, of the afternoon, about 1% higher for the banks as well. Would you take a trade going into close?
That's right, Neeraj, that we are seeing some buying interest again emerging in the second half. And thanks to the banking pack cause on Friday, we witnessed buying interest coming in the banking space after a long period of underperformance. But Neeraj, if you see the index, Nifty, we see multiple hurdles coming close to around 94, 94.50. So fresh buying, I won't recommend considering the risk-reward ratio. Rather, I would take a contrarian trade in index here. So for the weekly, 23rd April, weekly put close to around 9,000 level. One can go buy, which is currently quoting at 55 with stop of 10 and target of 150 to 180.
Okay. Those are some. Go ahead, Neeraj. All right. Perils of not being able to see each other. But anyways, just want to get your sense, Ajit, on what Tata Motors is doing today. I mean, fundamentally, they did report disappointing retail sales. JLR numbers were extremely weak, but I guess stock has been beaten down so badly that at some point you would want to see that little bit of a bounce coming back. So what do we do with Tata Motors today?
So that's right, Devina. So after extreme, negativity, we have seen the stock consolidating in a range of 60 to 75 for almost 2 weeks. And today we have seen a breakout of the same with the decent rising volume. The volume is almost double. So usually it trades close to around 6.5 crores of shares, and it's already 11 crores by now. So that indicates that that short covering is there. Plus, at the same time, some of the short-term traders, they are initiating fresh buy, considering breakout above the short-term moving averages of 20 days of exponential moving average, which is close to around 79. So we may see this, rebound extending further, and close to around 87 to 90 is what the stock can test in the near future. But considering that Nifty has strong hurdle close to 94, 94.50, one should maintain a stop at 78 spot for this long trade in Tata Motors.
Okay, watch out for that one. Heyman Kapadia is also here with us. Heyman, good afternoon to you. Let's talk about the index. The market seems to be in a good mood today at the start of the trading session, and this is in succession now that we've been seeing this excitement, considering last week was a positive close to the week, the week prior was a positive close, though marginal, but still we're not falling. Do you feel that this can extend itself any further?
Well, Devina, slightly. Last week we said 94 is on the anvil. We came to 93.90. 9400 was more of a very distinct possibility. Above 9400, I would be slightly more circumspect. We've retraced around 38.2% of the fall, Devina. I think a 50% retracement comes to around 9800 or slightly more. US has retraced 50%. So, yes. Coming to your main question, further upside possible. We need to close about 9400 and sustain. For that, a stop loss comes in at 9100. And if we sustain about 9400, an upside to 9800 seems like a very distinct possibility. But one, I'd like to reiterate, it's a recovery, it's not a rally. So it's a bounce. So one needs to be careful and alert and very nimble, Devina.
That's on the indices. Did you feel that the Nifty Bank really pushed itself over the last week? The recovery was quite phenomenal, coming in on days where you've seen the Bank Nifty moving up 7-8%, and the Nifty is up just about 3% And then if you can also add in your stocks that you're recommending for the afternoon.
Yeah, for the Nifty, I'd have a buy call on the 9500 call month end. As far as Bank Nifty is concerned, Devina, I think it had to play catch up because the Nifty was doing reasonably well. The Bank Nifty was floundering, so to speak. I think last Friday we saw 16% OI reduction. I mean, I think that seems more like short covering to me because if the Bank Nifty is moving up and the OI is going down, it seems like a short covering. But 21,500 is important. We need to take that out. So yes, further upside, yes, we've seen PSU banks participate. I know they don't have too much of a weightage on that, Devina, but PSU banks are finally participating. And yes, Bank Nifty needs a further upside, obviously, for the Nifty to get pushed ahead. But 21,500 is a level to watch out for. In terms of individual stocks, Devina, two stocks which I like. First is Reliance. Reliance has already moved a bit, so I would like to tweak the figures a bit. Reliance is actually breaking out from here. So the original buy was at 1230. I'd like to change it to on a decline to 1240. Stop loss 1220, target 1280. We've been consolidating over here, one of the first stocks to move, and it's actually breaking out today, Devina. Secondly is State Bank of India. We've been floundering over here between 176 and 198 for the past multiple weeks. The outlook is now turning positive. The mechanical indicators on the daily chart have given a buy signal. And looking at the Nifty PSU Bank Index today, Devina, one gets the feeling that a bounce is coming. Once again, a bounce. But the bounce looks more of a bounce above 198. We need to take out 198, but nevertheless, buy at around 193. Stop loss 187 and a target of 205. Above 198, I think we could see 210, 212. But I think we are running short of time, so this could probably happen in the next few trading sessions, Devina.
Okay, that's the technical view coming in on the markets right now. Remains to be seen whether this pullback that we've seen in the last 2 weeks there are more legs to that rally or not. Remember, Nifty's recovered nearly 23% now from the lows that we had seen of about 7,500, and both Nifty, Bank Nifty comfortably trading above their 20 DMAs. But let's also get you some fundamental perspectives. Samir Kalra, founder of Target Investing, joins us on the show. Hi, Samir. Good afternoon. Good to have you once again on the show. Let me start with the biggie itself, HDFC Bank. We've kickstarted the earnings season, and business growth from this bank, Samir, remains robust despite of economic activity getting impacted due to COVID. They have a strong liability franchise, which is supporting their margins, and of course, the higher liquidity levels that they have maintained. It seems that they will be able to ride through this crisis as well. Having said all of that, numbers looked good. Commentary was also quite good. It's been trading below its historical averages. We've seen HDFC Bank trading at 4 to 4.5 times priced book, currently at little over 2, I guess 2.3. Is it a good buy? It's corrected 25% so far this year, but still an outperformer among the Nifty Bank constituents.
See, Navneet, the results were good and maybe to a certain extent better than expected, even accounting for last 15 or 20 days of March disruption in some states and then fully nationally. So I think the slippages have improved drastically. So that's a good sign from their books. And secondly, I'll not preempt any move, being out here, and because right now also reopening from today also, if I see on the corporate side, it has a limited reaction from corporates as well, especially the large ones. So I think the corporate requirement of credit might still be flat for next couple of months. In that, HDFC doesn't have a solvency issue for sure. That's not the problem over there. The issue for me becomes the unsecured book which they have. They have got a breather from RBI on the 90-day extension as well. But again, for me, the management change, again, whether it's internal or external, becomes one of the major points in a bank change of hands. So I think it's at an attractive valuation. I'll not say it's cheap even as of now, given the situations and the ground reality has changed. It's not the question of solvency as far as HDFC Bank is related, but I'll still feel there's more downside to rather than the upside in a near or medium term future. So I'll rather have a look at it maybe another quarter past and then see the valuations where exactly it is.
In fact, we should keep an eye for the next quarters because post RBI's announcement, they've said that banks are required to be making that provision of 10% with regard to the moratorium that they will be giving their borrowers, which according to a lot of analysts can hurt the profitability of the banks as well going ahead. So that fine print and how the data pans out, I think that remains key. But of course, something which has been troubling Bajaj Finance and HDFC Bank has been the unsecured loan book. But I think they clarified in their conference call as well, majority of that, nearly 75 to 80% of that unsecured book is coming from a good salaried class borrowers as well. So let's see how that pans out. But Samir, what about Tata Motors? Good run seen. Of course, it's beaten down 50% so far this year. And we're looking at backward data now. JLR has, of course, started giving quarterly updates, and it was expected, the numbers which they presented. What do you do here? Has it bottomed out? Is it giving you valuation comfort? Or would you wait out here as well and see how the performance is once the lockdown ends, whether the demand comes back or not for this space, which has already been depressed for last 1 year?
As far as the automotive industry has gone, even pre-COVID, I wasn't very optimistic about it, and it's been rather than 18 months where my stance has remained the same, and it further enhances from here on that the automotive industry will be the most difficult to restart, first of all. So the supply constraints and the supply smoothing out will take a lot of time, whether globally or locally as well. Globally, it has taken some kind of a kickstarter from China being already set up at a certain level. So that helps. But domestically, I see a lot of hurdles coming out, even from the supply towards the dealers, and then the demand from the customers. So it won't be that easy. So I rather give it a very big pause, and maybe at bounces, I would rather get out of auto stocks rather than getting in or adding certain value there.
Okay, so that's the view from Samir Kalra. Samir, stay on. As I request some of our other guests also to stay on, it'll be important to highlight one sector, which is cement. Not just because of the move that the sector is at. The set of numbers start trickling in from tomorrow. I think ACC comes out, and then we'll have a few others too. Investec has come out with a note on the cement sector post COVID-19. I'm guessing that they believe that the numbers and the growth numbers, etc., will all be having a bit of an issue. Let's get in. Nitesh Shah joins in right now with his thoughts. Good having you. Thanks so much for joining in. What are you penciling in for the quarter gone by? And I'm guessing that what is more important is the commentary that comes in from these companies. How do you expect the big ones to behave in that scenario? Let's start off with ACC, for example. What do you expect in the quarter? What do you expect to hear from the commentary?
Thanks, Neeraj. First, looking at the quarter, so for now to drill down into Q4, Jan, Feb, and March. Jan and Feb, the industry growth was quite solid. It was at 7% year on year. Just to put into perspective, the stacks up against 11% growth was just up 1.82% year on year. So things were just getting better, wherein we put at in March. March, what we in our numbers is volume degrowth of anywhere from 10 to 20%. It will have an impact on FY20 numbers. To answer your question, who are we looking at FY21? In first half for our coverage, we are looking at around 30 to 40% dent in on a year-on-year basis. And we are factoring a steep recovery in second half. I wouldn't say steep, a gradual recovery in second half, wherein we are factoring EBITDA growth of around 25% year-on-year basis.
Ritesh, we were talking to Shree Cement the other day, and he was saying that it's virtually impossible for him right now to predict anything with regards to growth numbers or the consolidation within the industry or pricing for that matter. So how do you go about when you're penciling the estimates or giving calls? Where is it that you find comfort, and what's the reason for that comfort within that cement pocket?
To answer your second question first, pricing we believe is not clear function, only a function of demand and supply, or a function of balance stress. Given the knock that you see on the tail in the sector, there will be far more discipline on supply that will induce price growth into the sector. And as you would know, basically the sensitivity of price to operational metrics is significantly higher than volumes. So we are hopeful that this will remain stable and it will marginally go up despite factoring in double-digit volume decline in FY21. And to answer your first question now, how do we see demand? We are factoring steep decline in first half and gradual recovery in second half. We do understand the new that the government has set in. We are factoring in gradual operations. And also need to acknowledge that the rural income has pretty good on back of the Rabi thing. So we are factoring there will be certain stimulus on the infra side, and given the rural push on the demand, I think for a year we are looking at 3 to 5% volume degrowth on a year-on-year basis.
Okay, that's for the industry as a whole. I'm just going to focus on ACC. Ritesh, hi, good afternoon. They report their earnings tomorrow. Now, it's a pan-India player, so it becomes an important number to track as well. But if one were to look at stocks like ACC, Ambuja, which still are basically large cap companies, they've been trading below their replacement cost for a while now. Do you see any value here, and what is the expectation from the numbers? Of course, I know the revenue is expected to be lower because of what has happened in the month of March due to lockdown. Also, in terms of cost perspective going ahead, do you see any benefit for these companies considering the crude prices have also fallen?
Right. First, specific to question on ACC, we are looking at around 530 crores of EBITDA, which implies a 20% year number. To answer your question on valuations for Ambuja and ACC, they have been cheap for long. That's for a reason. We recently upgraded the ACC to buy back of the sharp correction in the stock prices. There's a lot of interest in Ambuja and ACC, and our top picks are Arctic and Ambuja in the space. The reason why Ambuja and ACC finding interest is because both the companies are net cash, FCF significantly at attractive levels. That's the reason both the companies are finding interest and are also buy list. And lastly, to answer your question on cost curve, now crude has come up very sharply, but look at the petcoke, which is the chief constituent for power cost. The prices per year has actually moved from $65 to $50. If one does a broad ballpark math, it will imply adverse impact of nearly 70 rupees per ton. But the good part is most of the cement mills, they have inventory stock till 45 to 60 days. And Q1, there won't be much volumes. So there will be a cost benefit of low-cost inventory, not only in Q1, but also Q2. What one has to look at over here is the consumption cost, not the prices of petcoke. So we do factor some benefit of petcoke prices into the what we intend to say over here is the cost curve, because of current fuel cost, will be flattish to what we see in Q4. The other variable is diesel. Diesel prices have come off very sharply, but it's not going to make much of impact. Thirdly, basically, the companies can look for alternate avenues for fuel oil vis-a-vis petcoke. However, there are certain operational issues to absorb that into the kit. So taking into account for full year FY21, there will be some absorption in first half, and one has to actually wait and watch out for petcoke prices behave in Q3 and Q4. So we don't see any cost influence into the cost curve either because of petcoke, diesel, or fungibility of petcoke to high sulfur fuel oil at this point.
So basically, you're suggesting no cost tailwinds also coming in for these companies. Ritesh, just one last question. Cement makers have resumed operation, I think, with effect from today. And of course, not all the plants, some of them which fall under the required zone which the government has laid down. So in a phased manner, now they will be opening up their plants. And this comes at a time when demand is still lower. Cement as a product, it's perishable. Just asking, what sort of capacity utilization do you see for these companies? Because if there is no demand, does it make sense for them to now start manufacturing if they don't have orders?
So most of the companies will gradually reach the capacities. Now, what we are looking at is infra is something which is likely to pick up. Now, if you look at it from a social distancing point of view, if you take a 100-meter radius, you don't need many people to put on a road project or on a dam. So definitely this whole project will find its feet. It may find its feet faster than what we expect if government steps in with some more stimulus measures, or it eases out liquidity, specifically infra contractors. Then it can definitely find its feet faster than what we are looking at. And secondly, on the rural side, the companies, we are also like, how will they push volumes given you don't have leaders with their own. But if you have catered to a kilometer radius in a rural area, if you even start up with one distributor, you can actually move the material into the market. So what the companies are looking at is this juncture is to capitalize on the rural demand because that has been good. And secondly, on the infra side, I think as per the government norms also have given a go-ahead on infra projects as well as construction activity in certain areas. I think this is good enough, and you see more companies actually go ahead and start the grinding unit. So we are quite hopeful of a gradual recovery as we head into the second half.
Yep. And we've actually heard the management of Shree Cement also saying that, as and when demand comes in, the problem is demand and it's not production, because you cannot store cement. You have to grind and provide it as and when demand picks up. Ritesh, thanks very much for joining and really appreciate you taking it. Talking about, cement and construction, a lot of infrastructure companies have also done well. In the morning session today, you had a whole list of infra stocks up and about. Samir, do you feel that it's time now to look at some of these cement companies and probably even start, looking at infra, because the government has, given its go ahead? There could be some infra spending lined up, and this could benefit.
So I think infrastructure spending should be the top priority even when we fully reopen, because that's the easiest way to, let's say, bump the productivity of the country. And that's where cement companies are the best place. For me, there are again, balance sheet is showing a lot of cement companies. And when they reopen, the working capital will even further stretch from here on. So I think the balance sheet is the more priority. And for me, Shree Cement, JK, both JK Cement and JK India. So both of them, all these three play out a better scenario, and Ultratech in the large cap. So I think these four have the strongest balance sheet to play on the working capital stretch right now. Because right now, everyone who opens will deploy a lot of cash flow of their own, and then the repayments will start to come in. So there will be a lot of mismatch of working capital from here on. So it's better to stick with the well-known, well-balanced sheets and stable balance sheets who have seen even a higher cash flow disruption and maintained it.
I'm just going to start taking some viewer queries in because it's that time of the show. I'll start it first with a query that's coming from Anand Kumar. Need a view on Bajaj Finance and Credit Access Grameen. Now, obviously, we know NBFCs as a space is struggling a lot, and so is Bajaj Finance being the bellwether. But Sameer, a quick answer. What's your take on whether or not you should invest in a Bajaj Finance or any microfinance lender?
MFSI and NBFCs are in a very sticky position right now, even for credit, because the amount of raising funds is becoming costlier and very difficult. So hold on till June quarter results, and then you can take a better look at it.
Okay, hold on to the June quarter. Next comes in from Girish Sharma. Need a view on Hdfc Bank and IndusInd Bank. Hdfc Bank we've already spoken about. I want to talk about IndusInd Bank. This one also, the story is pretty similar. The graph is pretty similar, but the sell-off has been a bit of a struggle here. Do you feel that this one has chances of coming back at a better pace in the likelihood of the sell-off, Sameer?
So I think IndusInd will be, for me, a sell on the rise. Two situations very quickly. The CV cycle has totally been destroyed and it's unlikely to come up. So IndusInd has a lot of CV exposure, especially to fleet operators, large fleet operators who are in big trouble. Secondly, the end of Bharat Financial, that MFI end, will face a lot of cash issues. So it's better to exit on any kind of a large rise here, rather than putting in money, and you'll have a better opportunity at a later stage.
Okay. UNO Sriram Prasad is asking us for a view on Hero MotoCorp. Now, obviously, we know that most of the auto majors have said that they're not really going to start production till the 3rd May lockdown. Maruti has come out and said that it's not a matter of getting labor, it's a matter of getting supplies. And so is the issue with most of the other OEMs as well. Your quick take on Hero MotoCorp, Sameer.
MotoCorp can revive very quickly out of the two-wheelers. But again, for me, there's a lot of negative flows on auto still pending rather than positive. So I'll just be a seller on a bounces out here.
Okay, and the last query comes in from Mohammad Ali. Why is Catala Healthcare falling despite all the positive news? The fact that we've already seen a bigger rally that's happened in the pharma space, Cadila and Zydus, for that matter, has been seeing a lot of US FDA approval. Just a quick word on the technicals, though. Heyman, Cadila?
We've had a run-up, been a cool-off, support at 330, Devina. We had a run-up from sub 250 to 370 plus. It's taking a breather. Pharma is a sector which stands out in its strength. I believe that even if the market were to unravel, pharma would stand out. So if 330 breaks at the gap, it could fall to 320, but the outlook remains promising, positive from a longer-term point of view. This is the only sector which is standing tall in a bunch of ruins, actually.
Okay, that's the view coming in on these stocks. Let me just quickly do a market check. We're at 92.68, by the way, so we've given up all the gains that we saw at the start of the show, at least. At that time, Nifty was above the mark of 9,300, and I was mentioning 9,300 is a very crucial mark. We've seen call writing coming in at that mark even in today's session. On closing basis, we've not seen 9,300 for a while now, so we're just about flattish. Nifty Bank is also in the red. It's down by about closer to 0.6%. Futures trading at a discount, and that basically gave you an indication there is profit booking or maybe some fresh shorts have been created at higher levels. Some individual stocks I want to discuss. And Ajit, coming here on PVR, last week, I think last two sessions, we were seeing good recovery coming in for PVR. But today, once again, it's come under selling pressure, down about 8% in trade. How are the charts looking? Where do you see the stock bottoming out? Is there any trade to be taken here? Ajit, that query is for you. PVR?
Yeah, Navneet. So basically, after spending nearly a week around the 950 zone, we have seen a decent rebound in PVR. But, the short-term averages close to around 1200 is still a hurdle for the stock. So we are seeing the stock, witnessing selling pressure from that level today. And I believe that this consolidation will continue, considering that we have the extended lockdown and we all know that the kind of situation that the multiplex are in. So I feel that it's more of the consolidation phase that we are seeing in the stock, and downside seems capped close to around 900, 960 is the area where one should again consider initiating fresh long in case if it comes close to that level. Shorting is not advisable considering that the overall trend is still that we'll see buying emerging at lower levels. So rather, initiating any fresh position at the current levels, one should wait for a dip, and around 960, 950, one should initiate longs with 900 closing stop loss.
Okay, so before taking any fresh position in PVR, to watch out for those levels. I mean, quickly, we've not discussed a technical view in Tata Motors so far, and it's been active right from the word go in the morning. Of course, it opened in the red, but there was a sharp recovery. The recent low is somewhere about 63 to 64. How are the charts looking? How are you viewing the trading activity today? There is aggressive writing actually that I can see on the 80 put, and Tata Motors put after a while had really option strikes are really active today. Would you take a bet? Do you think it's made a bottom and from here on there can be a sharp recovery?
Well, yes and no, Navneet. Like you said, after a long time we have some action, decent action on Tata Motor options, especially puts. A bottom has been made from a short term, yes. A medium term, yes. Long term, I don't think so. But the market itself is in a recovery mode, not a rally. So extreme short term, I agree. It looks positive. And what you said, Navneet, even the cash market is absolutely in sync with what you said. We've seen NSE cash market volume at almost 12 crore. Now this is the high, and we still have 23 minutes left. This is the highest volume in the last 1.5 months or so. So higher volume, put writing, a bounce is in the offing, Navneet. How much more, I am not sure. Technically it can go to 105, but that seems like a far cry. I have a feeling 88 is something I would look at. But once again, very nimble, very alert. It's a recovery. One does not know when it will unravel and unwind. So, but yes, as of now, looking at the options data, looking at the cash market volume and the technical position, it's forming a rounding bottom. I won't see a double bottom for such a small bottom. Indicators positive. Everything seems to suggest small upside, a decent upside to Tata Motors from here.
Right, and rightly said, I mean, stay cautious in markets like these. It's been really volatile. So even if you see the recovery, all you know next day or 2 days later, there is a sell-off which comes once again. But getting you some fundamental perspective as well, investors should look at selling their stocks at every opportunity that comes their way, says Ajay Srivastava, often mentioned corporate finance services. The reason, he says, is the underlying weakness in the economy that was visible before the COVID-19 lockdown ensued also. Listen.
No, I think, I don't know bear markets or bull market, but I think it is definitely some opportunistic buying on the hope that there will be a big financial package coming from the government of India, and that should bail the industry out. Now, whether that happens or not, none of us know about it. We have been waiting for it and so on. So it's more, I would not say bear, I think it's more opportunistic buying. That's one. Number two is that the shorts have kind of just closed their positions and gone away. To that extent, the short positions have been closed. The market went up. The liquidity, as you know, is very low in the market in terms of trading volumes, etc. So to my mind, I think it's a set of three circumstances, starting with the US, the way the US market is going. Number two, opportunistic buying. And third is hoping for a big package to come from the government, which should bail the industry out. Now, whether these are correct premise or not, time will tell. But in our view, every big rally from here onwards should be used to sell, not to buy. That's our principal thesis. And the reason we say that is, that if you reset the clock pre-COVID, the markets were hitting highs when the economy was hitting lows at this point of time, and the market was starting to correct quite rapidly. So the government had a challenge pre-COVID itself. Now, post-COVID, the challenge becomes bigger. So we are not sure exactly what package can bail it out, whether the good Rabi crop and the Kharif can bail it out. But I believe that these rallies, big rallies, should be sold into for at least the leverage stocks rather than buy into the stocks.
Are you worried at all about ratings agencies and their actions against India if possibly our situation worsens or deteriorates from here? Because you've seen them doing that with Indonesia over the weekend. Their external debt position really weak, fiscal figures, ceilings pushed up. And that's probably going to be the case with us as well. We are going to see a big fiscal deficit number that's going to challenge growth in every shape and form. Do you feel the threat of ratings agencies looming large for us as well?
See, let me put it this way. Threat of rating is obviously there because once you lose an investment grade, then you get into problems in trying to, people to buy into your sovereign debt, etc. But I would say that's a little, kind of built into the market structure today because it doesn't matter which country it is. If it's a developing economy, the fiscal deficit is going to go up and the rating agencies will have to kind of lower everybody's rating. So if you look at the new norm was X, now, it's not that somebody will remain up and we will only go down. I think the whole world will kind of go down in that manner of speaking. So to that extent, relatively, everybody was where it is before the whole thing started. So that's a good mitigating point that we are not going to be the singled out to be the only one getting hurt on the rating. And therefore, relative to the rest of the world, we'll be where we are. So I don't think that's going to impact us much. And number two, of course, I don't impact us too much because I doubt many Indian corporates are going to borrow money in the current year because there are now not enough capex, etc. Number two is government has already seen a large amount of FIs selling in debt funds, so mostly should come back into gilt rather than going out of it. So I think relatively speaking, I would say that's a risk one can run in and run easily because everybody's in the same boat at this point of time. And India's dependence on global capital, non-equity, should not be that significant in the current year.
Well, a few stocks are cracking. We marked PVR just a while back. It's now down 9.5. So keep that at the back of your mind. But I think the other one that you need to monitor is ICICI Bank. And I think the stock has had a bit of a crack in the last few minutes, 4.5 or 5% lower now for ICICI Bank from nowhere. It's now amongst the list of the top 4 losers. I think there is some news flash in one of the channels about it having some exposure to a global link firm which is under some stress. Maybe that's why the stock is correcting so much, but 4.5% lower in the session. A quick chart check out here, Hemin. ICICI Bank, what levels do you see? Is it a short even after a 4.5% downtick?
No, support at 350, Neeraj. We saw 50% recovery from its lows, 50%. I mean, the whole market has been that way. Many stocks have. So if a stock goes from 270 to 385 in 3.5 weeks, in what is very clearly a bear market or a downtrend, no, it can't sustain. But like you said, it's down 4.5%, very strong support at 350, and I still feel the bounce might not yet be over. There could be some more juice left. So no, it is not a short now.
Okay, it's not a short now, but within the market which is correcting, there are a few stocks which have done okay in the last few minutes of trade. The likes of Tata Wagons, for example, has gained, especially restaurant has gained a little bit. So just watch out for a couple of those names. Kolte Patil is having a very interesting day today, 10.5% higher. So do watch out for that stock as well. Samir Kalra, I just want to move tracks a bit. There is a bit of a pause today in some of the high-flying names of the last few weeks, particularly the auto ancillary companies. Let's say you were having a stock like Motherson Sumi or a Bharat Forge in your portfolio. Would you get out of those names in this bounce that we've seen last week?
So I think, Neeraj, for me, every auto anch right now is a big sell. I'll give you a clear reason of it. See, till the time they don't start, the OEMs don't start. But the payment cycle, the working capital cycle will get squeezed for auto anchors very badly in next 6 to 9 months. And their cost of raising funds or even getting the availability of funds will become next to kind of very hard to gain onto it. The global ones, especially Bharat Forge and Motherson, will be in a deeper trouble because globally they will face kind of a downgrade because already their working capital cycles are stretched out. So if they go for an aggressive acquisition in next 6 to 9 months, given the valuations of a lot of auto anchors will fall in, so that will put additional burden on them. So if I see next 6 to 12 months for auto anchors, especially based in India or globally, it's a very negative view from my end. And even these kind of bounces should be totally, you should totally sell out, or you can sell it out in chunks if you want to.
Okay. I'm going to look at two stocks, both expensive stocks. Both stocks have been doing extremely well. GMM Pfaudler and Pidilite. Now, GMM Pfaudler, remember, we spoke to the management as well, and they said that they see the specialty chemicals in the pharma business picking up substantially, and that's where they step in. They've already got 2 new furnaces on the way. They've got a land parcel in Hyderabad that they're looking to develop as well. So everything is put into place for them, and they're really not seeing a big impact of COVID-19 for themselves, at least on the business. Pidilite, on the other hand, has seen a little bit of a pullback, but is a strong business model. Will you invest in this, Amit Baldra, either a GMM Pfaudler or Pidilite?
So I would, if I have the opportunity, I would do a SIP in both. If I hold right now, I'll hold the positions. I'll not add them because Pidilite, again, there has been a lot of competition past couple of years, and they've proven that, these competitions can come and go, and their market share is already gaining as well. And the restarting can be much more easier at Pidilite end. So that's where the only trouble becomes the distribution end. That can, start quickly enough. So I think, and they have a balance sheet to sustain these working capital issues if they come through as well. GMM Pfaudler, again, good place to be in, and I think these kind of falls also, even if you get it on a high, it's a best place to do a SIP in these kind of a high value prices because the corrections are rare, so you'll not be able to catch them very often. And secondly, the progress of the business and the balance sheet is very sustainable as of now. So as per my feeling, it's better to look on a quarter-to-quarter basis and continue your SIP. If you see any major deterioration in the balance sheet, then only the valuations change drastically. Otherwise, I think these are the more opportunities in these kind of stocks.
Okay, and I just want to go back to ICICI Bank as well. Aside from the news, remember they had the outlook being downgraded from stable to negative by S&P Global ratings, saying that the bank is exposed to economic headwinds faced by India's banking system, and they do have a good asset quality, but they have better peers in comparison, which offer more value. But nonetheless, the negative developments, as posted by some of the other media houses, is weighing down on the immediate stock price performance by ICICI Bank. In fact, let's hear out S&P Global Ratings Nikita Anand. She spoke about not just ICICI and Axis Bank and why they've revised their outlook from stable to negative on both these names, but also the NBFC space, where the outlook has been revised for quite a number of NBFCs.
Microfinance is amongst relatively more riskier segments, given the income profile of the borrower itself is inherently risky or weaker, and there is a huge proportion of cash collection. Apart from that, on the housing side, we see affordable housing as another portion that could come under stress because, again, the lending is to people who come from a weaker strata of the economy. Otherwise, mortgages on the whole should be relatively low risk asset class during this stress period. Commercial vehicle a bit more vulnerable because they were anyways, again, notwithstanding COVID, seeing some softness with the slowdown on the economy anyways. In terms of retail loans in particular, I think there we have to make a distinction that large-scale job losses or mass unemployment is something which can bring about some stress on the overall books of the retail portfolio. In particular, the unsecured piece or the personal loans piece and the credit cards piece could come under stress if we start to see losses happening. Otherwise, it will depend upon a company-to-company basis. If the exposure of a particular company is more towards the salaried class and the salaried customers also are more from better rated companies, I think then this is a more resilient profit borrow profile as compared to say if it's linked more to the smaller industries and SMEs and more on the unsecured small ticket lending space.
Your ratings outlook call on two private sector banks as well, the Axis Bank and ICICI Bank. Now, while obviously you have said that Hdfc Bank and Kotak Mahindra Bank are better placed, have a stronger asset quality, and are able to withstand this weakness in the operating environment better, are Axis and ICICI at a significant risk, or do you think that they have the capability to manage?
That's a very pertinent question, and I think for us also, that's how we have sort of differentiated between the outlooks. So first of all, if you see, Kotak and HDFC are sort of entering this period from a relative position of strength vis-a-vis Axis and ICICI. So they are, HDFC and Kotak, both largely retail-oriented banks, very less exposure to long-term project financing, and hence the last, corporate blow up that we saw in the Indian banking sector, these two banks were relatively unscathed. They were performing amongst the best in that peer set, whereas Axis and ICICI saw some weakness. They were, of course, slightly better than their public sector counterparts, but they saw some weakness in their asset quality. So the relative position, again, is very important here. So they are entering on a slightly higher stock of stressed assets as compared to HDFC and Kotak. We do believe that there is a chance that they perform better than the industry in this economic slowdown as well. And we have sort of taken that into account. That's why we've only changed the outlook at this point in time. We do see some pressure, but we do see a possibility that they would be able to manage a slightly better than industry asset quality during this time as well.
All right, and we've seen most of these NBFCs giving up the gains that we saw last week, and the prime example of that is Shriram Transport, which is also a top F&O loser, down 14 to 15%. Cholamandalam Investment has seen cuts of about 10%, and you've got stocks like M&M Financial also seeing correction of about 7 to 7.5%. By the way, Nifty Metals Index is your top sectoral loser. It's corrected a lot right now. It's down over almost 3% in trade, and you've got stocks like Hindalco, which recently completed its LRS deal, is down 6%. JSW Steel, NMDC, Vedanta, Coal India, all of them are in red. But we just got a few minutes to go for markets to shut shop. So very quickly, I want to go across to our techies and get you some closing strategies as well. Himeen, coming to you. Any BTST or any STBT for tomorrow's session?
Navneet, BTST on Mindtree. Reliance have already given at a 236, so I won't repeat Reliance. But yeah, Mindtree as a BTST, Navneet, 1% stop loss, 2% target.
Buy on Mindtree. Ajit, what about you? What are you picking?
So Navneet, I would go short in Grasim, and it has formed a fresh shorting pivot, in fact. And before Icici results, we may see further slide in the days to come, is what charts are indicating. So close to around current levels, one can go short and stop of around 535 and target of around 490.
So watch out for all these strategies for tomorrow's trading session. I'm just revisiting ICICI Bank, which has fallen on some news reports. And Samir, I'm coming to you since you just tweeted a while back about this news that largest oil trader who's based in Singapore was already facing inventory issues, and now they filed for bankruptcy, and they forgot to file for $100 million of losses, out of which ICICI Bank has 100 million exposure to the same company. Precisely, I guess that's the reason. It's a Reuters report, if I'm not mistaken. How are you reading into a news? Is it too big a deal? Do you see further correction if this is true?
Navneet, there's this company called Hin Long. They are Singapore-based, and they are the largest oil traders globally. And they were already facing inventory issues and financing issues because bank has frozen their LCs a lot of places. And then I think yesterday or on the 18th, they filed for bankruptcy globally. ICICI Bank has around 100 million exposure. Out of that, 75 million is through inventory of oil, and that's through the tankers. They have already filed, I think, for the asset arrests of these vessels. So there are 2 vessels involved in it. So any which way, I think it'll become a very big issue for ICICI Bank because globally when these, and for me, oil-related traders are biggest risk exposed to banks right now, whether globally or locally as well. And that's where I think a lot of defaults will come through in the next 3 to 6 months. And ICICI Bank has a lot of exposure in others as well. So I think that's where, for me, ICICI Bank will be a total sell even at these levels.
We just spoke about this a while back as well. Just keep in mind, though, ICICI Bank had already issued the writs against the vessels, 2 of the vessels with the cargo owners claim as well. And the banks, which is SocGen and AB and AMRO, had already issued the charge on the assets too. So you got to keep that at the back of your mind as well. Just time for one final question. Samir, got to actually take a moment to thank you. It's really good having you today, and stay safe, of course. But we just have time for one final question, and I'll take that question on Bharti Airtel. That stock has largely been okay. The last 2 or 3 sessions, it's actually come off a bit. It's not been able to rise. I mean, very quick thoughts here. Bharti Airtel.
Minor correction, support at 485. Wouldn't go short, would take a contra buy only at 485 with the 7-point stop loss.
So you will look for a contra buy, but at a slightly lower level. Okay, fair call. Well, it's usually a strong stock. Just as the last few days, it's corrected a bit. But let's start wrapping up the markets because we're very close to market close, and we've given up almost all. In fact, given up all the gains for the Nifty. It's almost into the red. The Nifty Bank about 0.76% into the red. And while at the broad end of the spectrum, it has to be NBFCs which are correcting. At the large cap end, there are some banks which are coming under pressure, noticeably ICICI Bank, yes, but global commodities too have come under pressure. So Hindalco, JSW Steel amongst the top losers today. Axis Bank actually eclipses ICICI Bank as the top loser, down about 5.5. ICICI, in fact, has recovered a little bit from the lowest point of the day. IndusInd Bank about 3.5% as well. And then stocks like ITC, Maruti Suzuki and Eicher Motors too. So autos too, which had gained quite a bit, are correcting a bit in the session. What is doing well? Tata Motors and Hdfc Bank. Tata Motors, though, has lost a bit of its mojo. It was up about 7% at a point of time. Now just about 4.5%. Hdfc Bank has largely stayed okay. I mean, yes, 15 rupees off the highs, but for 944 or thereabouts, it's not doing bad. Sun Pharma has some gains. Infosys ahead of the results has some gains, so 3.5 higher for that. And HCL Technology is about 3.25 too. Reliance, the big boy, 1250. Will there be a deal? Won't there be? Time will tell. Navneet, what about the broader end of the spectrum?
It's mixed session for the broader market indices too. While you've got the mid-cap index, which is closing with just mild bit of gains, and you've got the small-cap 100 index, which is closing in the red. Let's see where the closing rates come about. But mixed session, the only respite was market breadth continues to be pretty encouraging in favor of the advances. And this is not just the trend for today, by the way. It's been the trend for the last few sessions. So that's quite encouraging. Looking at the Nifty 500 constituents right now, you've got all the PSUs, and Nifty PSU banking index is the top sectoral gainer, up about 4%. So look at stocks like UCO Bank, locked in upper circuit with gains of 20%. Central Bank was also locked in upper circuit, 20% gains coming in there too. Then you had JNK, 20% gains. Indian Bank also rallied about 18%. So PSU was the flavor, but the most, I think the heavyweight SBI did not see those gains today. Kalpataru Power was also up and about. So upper circuit seen there as well. Supreme Petro had a good session. Colte Patil was up about 14%. Then you had stocks like Syngene, which rallied 9%. Sonata Software was up 8 to 8.5%. On the losing side, Shriram Transport was down after seeing those gains last week, so down about 15%. Cholamandalam Investment and Finance, all your NBFCs basically giving up last week's gains. M&M Financial too tumbling 8%. PVR down 7.5%, but there was some intraday recovery definitely in the stock, because at one point of time it was down 10%. RBL Bank, Radico, Khaitan, Interglobe Aviation were a couple of other stocks within the Nifty 500 index which fell in today's session. And volatility also rose after 3 or 4 sessions today. India VIX is also, I think, closing with gains of 20%. But Devina, in terms of contributors today, clearly it was Infy and HDFC Twins alongside Reliance, which contributed at least. And that's the reason, by the way, Nifty's closing flattish, or else there would have been losses.
Yeah, and quite the contrary. ICICI Bank suddenly dropped from being a contributor on the upside to a contributor, the largest contributor on the downside. But on the upside, HDFC Bank 34 points, HDFC Limited 22 points. Infeed, Reliance and Sun Pharma are your top 5 gainers on the index. Amongst losers, the biggest loser obviously being ICICI Bank, that drained off about 22 odd points. ITC is the other one that lost about 15 points. Axis Bank and HUL, along with the Maruti Suzuki, which lost about 6 points. But the breadth of the market is positive. 959 stocks advanced, 596 stocks declined. And the cash market turnover too is on the positive side. So almost nearing 48,000 crores on NSE cash. And we've seen the last 4 or 5 trading sessions, this average in the cash market in terms of the turnover has really started to spike. So maybe a little encouraging on the activity front. But quick closing thoughts from both our experts then. Hemant, I'll come to you first. What will you be watching out for trade come tomorrow?
Small intraday support at 9200, Devina. So if that cracks, there would be a near-term hiccup. And like Navneet mentioned, the VIX is up, and technically the VIX looks set for a bounce back. It's taken support on the 55-day exponential moving average. So I think some turbulence expected, and it looks like negative turbulence. The range between 94 and 9200. If 9200 breaks, then we see some more pressure coming on. But the Nifty and the Bank Nifty both in the end have given crossover sells on the MACD and the hourly chart. So I'd say a slightly weak day tomorrow, Devina.
All right. And Ajit, what are you going to be watching out for?
So Devina, I'll continue with the short position of 9,000 put that we recommended in the beginning of the show, because the banking, which showed the resilience in the last trading session, failed to capitalize on those gains, and today ended close to around the base low. And in case if it fails to hold above 20,400 spot levels, we might again see pressure building in and close to around 19,900, which is around 700, 800 points kind of a losses cuts in the Bank Nifty in days to come.
All right, gentlemen, we'll leave it at that. Thank you very much, as always, for joining in, Ajit as well as Hemant. Thank you so much. And on that note, we're also done here on Countdown. Thanks a lot for watching. From Navneet, Neeraj, myself, and the entire team, that's the show.